All right, welcome back. Let's go over a win that was taken on NAS earlier today. So in the process, in this video, what I'm attempt to do is I'm gonna explain my overall bias and how I came up with my overall bias, and I'm going to explain the entry that was taken, dealing with supply and demand. Shout out to Camilla, really learning her how she trade. It really helped me on my entries, which is very good. So what I want to do is I'm gonna take some time and I'm gonna talk about risk management. Risk management is very important. Let's say if your risk reward ratio is a 1 to 3, that means that if you actually win if you win one trade, you actually just secured your account for 3 losses. So let's say, for example, if you on your account, let me pull up my calculator here. Um, on your account, let's say, for example, if you're looking to increase your account by 20 to 15% a month, which is actually very good. I mean, you want to talk about put money in the bank, you can hope that you get 4% a year. But if you're talking about 15 to 20% a month, let's look at the numbers. So let's say, for example, if you're just able to hit a 1 to 3, and let's say, for example, if you come out with $200 on your account, let's say you start risking $50 a trade. Whenever, personally, in my opinion, whenever I have an account that's under $500, I don't trade off percentages. I trade off of how much money I feel comfortable I'm able to put back. So, like, if you get paid from your job, I mean, you can not eat out for a little bit and have $50 to spare. So let's say, for example, if you're risking $50, right? And let's say if you do a 1 to 3, that's $150. So if you hit $150, let's say out of 30 days out of the month, um, let's say out of 30 days, let me see, well, it's 5 days a week. Let's say 20 days. Out of 20 days, let's say you have a 70, let's say you had 65% winning ratio. So 20 times 65%. I'm sorry, 20. I'm sorry, 200. I'm tripping. Times 65%. How much is that? That's $130. No, I am tripping. All right. Yeah. Okay. Yeah. All right. Let's say 20 times 65%. All right. I went to public school. All right. 13 times. So let's say out of 20 days out of the month, let's say you win 13 times, right? So 13 times you're risking $50. You hit you a couple 1 out of 3s, 1 to 1 ever. So let's say this. Let's say I'll do 1,350, right? So let's say that's almost $2,000, right? And let's say you lost 13 27 times. So let's say you lost 7 times, 50 times 7, right? It's $350. So you see how profitable you're able to be because you kept your risk consistent. You risked the appropriate amount, even if you lost, even if you back tested to rebuild confidence, right? You practice good risk management. Now, let's say, for example, if you risking 50, you're doing a 1 to 3. And let's say, for example, you hit 5 times off of a $50, off of 50, 150. So let's say you hit 5 times and you're sitting at 750. Now you say you're gonna double your risk, right? Well, you're gonna end up screwing your account up. You're gonna lose the 750 profit, right? So that's risk management in a nutshell. You really want to not. How do you be profitable? It's just don't. You back test, you come up with a good strategy, you test it out, you back test, and you don't do nothing stupid. Don't take any trades that you shouldn't take. A good strategy to do that I do is you do one trade a day. You're one and done, right? If you lose, that's it. Don't trade anymore, right? If you're going to say, based off of my account, I'm going to take 2 or 3 trades or like 2 trades, then you just take that $50 and you bust it down and risk $25 per trade, right? So it's really just risk management. That man. That's top right there, top notch. It's risk management and good psychology for trading. All right, so let's get into the trade of the day, NAS 100. All right, so pretty much how we looking. If I come to the higher time frame on a 1 minute, we drop down. I hope I don't have to redo this video. I think my screen froze. Let me refresh. All right, great. I do not want to have to redo this video. All right, let's go to the 1 hour. All right, so on the 1 hour, how are we looking? Let me go to replay mode. Let me select the bar. All right, so how are we looking on the 1 hour? At 9 a.m. So this is how the market looking at 9 a.m. I'm looking at the market. It's at around 9. The market opens at 9:30. Yesterday we like at 9:30 we shot up a little bit and we pretty much struggled throughout the day. However, when I go back and I look at previous days, we actually shot up pretty good. Also, I was looking at US 30 for the day. Let me just get on the 30-minute candle. All right, so this is you see what US 30 did. It shot up, right? So here we at 9:30. Look at the 9:30 candle. If you know anything about NAS, if you see that candle at 9:30 and that's the 9:30 candle, something ain't right. Uh I mean, the 9:30 candle, like, let me go back and look at the 9:30 candle. Like, look at this 9:30 candle, right? That's like 399 points, right? Let me go see if I can find another 9:30 candle. Look at that 9:30 candle. This 9:30 candle, it's like 183 points. 9:30 candle. Let me go back. So when you look at this candle, right? How many points is this? That's like 134 points, right? But compared to the rest of the candles, right? That candle is crazy. So what I did is I was like, what's going on with the news is the Iran war. And I went through Forex. What did I go to? I went to forexfactory.com and I looked at some of the more experienced traders and the chat that they got. And basically what was going on is the market was being influenced by the G7 summit. So I'm like, okay, price yesterday was moving kind of slow. We weren't getting a lot of volume. Basically what happened was we were struggling to come up. And I looked at this and I started marking up zones. Basically, a zone support and resistance, right, is when price hit somewhere and it reversed. It hit this area and it reversed. Came up a little bit, came it down. Hit this area and it reversed. So that's data to the left. So I draw a line to extend to that to the future. So when I get back to that price in the future, most likely is a high probability price is going to hit that point like it did last time. It is going to drop, right? So each time it hit this point, it's dropped. Each time it hit this point, it's just dropped, right? So I'm here. I'm looking again. I'm not really seeing. I'm looking at these candles. I'll drop down to a 5 minute. I think I was to get the details. I try not to look at market structure on the lower time frames, the 1 minute, the 5 minute, the 15 minute. I more so use it for data to understand what's going on with price action. What is price action? It's the way the candles are moving. It's the way the candles open. It's the way the candles close. Like, look at these candles. What does these candles tell you? All that wicks at the top, that is buyers trying to go up, but they got rejected. That's called buyer's exhaustion, which is usually signs that we about to go down. So that's one confluence. Now let me stack the confluences on top of each other. Not only that, look at these candles. We were strong coming up, nice size candles, but look at these candles. We got weak, right? Came back down, we went up, right? It doesn't mean that we're about to go down, but what happens is you can stack confluences on top of one another. Once you see something like this, that's a warning. Beware. That's all that is. It start to get ready. Once we got here to the zone, as you can see, when you see two candles close like that, just like twins, right? Tweezer top, right? Confluence, that we about to go down. Because what happened? Price on this candle tried to come up, got a little bit, it got stopped down. Price, same thing. The candle tried to come up a little bit, came up, got stopped down, right? Again here. This again here. So what do you see? You see resistance, right? Ooh, here, look at this one. It's one, two, three, four tweezer tops, small candles. Get down here. You see this right here. Buyer's exhaustion. Everything is screaming, we are about to sell. Even you look at data to the left over here. You see, once we were at this point, we went down, we went down, we went down. Not only that, look at this right here, the arrow. We got untested waters right here. 100%. When you look at price action, it fills gaps. We got a big, old, nice, juicy gap that has not been filled. You gotta know price is about to come down. So here is we at 9:30. I'm like, bro, we about to sell. I'm like, oh, it's going down. Let me go back to the 5 minute. I'm like, oh, it's going down. We about to sell. So let me click. All right. So I'm looking at price, right? Let me boom. So I'm looking at price. Okay. Price started going down. Well, before price got to that point, let me look at the 1 minute. Before price got to that point, I was pretty much looking in this area. Um, and what I had marked this area as a no trade zone. This is pretty much chop right here. What is chop? Chop is when you get your head chopped off. Because what happens here when you look at buying and selling, you get in here, you try to come up, it come back down, right? Um, you get in, try to come up, it comes back down. Try to come up, come back down. Then you're thinking it's going to come back. And again, this is the 1 minute. This is not the 5 minute. If you go to the 5 minute, again, you think you're going to get up, right? As soon as you come to this point, you better get out because boom, you come back down, right? You get in, you think you can come back, boom, you come back. So it's like a lot. It's like a lot of chop, right? For me, I trade on a 1 minute. Um, So when you look at the strategy that we trade, that you trade with, is you see a red candle, right? If we're looking to go in an uptrend, you see a red candle, you want to go ahead and draw your zone. Once that red candle is engulfed by a green candle, so okay, boom, I draw my zone, right? And if the wick is coming through it, you can cover that down too if you want. Then all I'm waiting for is price now to come now. Once this candle's finished, I'm looking for price to come touch my zone. So once price touch my zone, you can pretty much enter into a trade to actually come up, right? That's pretty much the strategy. But might I add you, right? So when you look at the strategy, I would probably be looking to take this trade up here. But might I add you, this is 9:30. These candles are being printed fast, like very fast. So a lot of times at 9:30, I think my computer's freezing for some reason. Okay, I'm back. My computer keeps freezing. A lot of times at 9:30, I don't trade. I'll wait till 9:35. I'll wait till the market cool off a little bit because sometimes those candles is moving way too fast. All right. Let me see here. So basically, what happened once price started coming down, that's when I started catching some wins. The reason why I went through this video and just I spoke about that overall bias is just price action and market structure. Looking at price action, looking at how the candles are being printed, how the candles are finishing, and stuff like that, how candles are struggling to come up. My influence shifted from buys to sales. Also, knowing that when you zoom out, you got look at this gap, like just straight, just a straight. You want to talk about a fair value gap? So automatically, what I said, man, 100% price is looking to fill that gap. So what did I do? Um, I went to I think it was the 15 minute, and I had drew my fib. For some reason, my fib tool is not working. Sometimes this thing cut up a little bit when I record, and apparently that's what's going on now. Huh. Interesting. This is crazy. All right. So I can't quite remember exactly what I did. I'm sorry. I can't quite remember exactly what I did. My fib tool is bugging out a little bit, but basically the purpose of a fib tool is you draw your fib. If you're going down, you start at the top. From the top to the lowest point right here, then you look for a retracement. Once you're retracing to the golden zone, which is the 50 and the 61, you look for that price to pretty much come all the way down and finish out. So at some point I drew a fib and I'm looking at price and I'm like, okay, 100% price is trying to come down to actually to fill that gap. So what I do, I drew some more zones. Again, what is a zone? Is when price came to a certain point and it went the other way. Price came to this point and it went the other way. Price came to this point and went the other way. That's support. And then also a good zone is on the flip side is when price came this way and it went down. That's resistance. So whenever you have resistance turn into support, that's 100% a zone. So I knew that price, if price would come down and breach this point, we would kind of hit the zone down here and we'd come back up, retest, and come back down to fill the gap. And if you look, that's exactly what happened. Price came, we broke, we retest, and we came down. And we see here we kind of at this point. Um, I think, in my opinion, tomorrow price might continue to sell off, and we're going once we get into this area, we 100%. I'm starting to look for buys again, right? Because NAS is actually in an uptrend on a major structure. So when I look at the win, let me go back to the 1 minute today. So where did the win come from today on NAS? The win came from around here. My wins came from around here. I can't remember exactly. I have to go to my broker. I can't remember exactly, but basically, I noticed we were in a downtrend. So what did I do? Is I came here. I marked up like the green candle. I wait till that green candle pretty much got engulfed. As you can see, price came back up, touched my zone. Price came back up, touched my zone. And what happened? I went short and I just printed, just printed, I got two entries too, by the way. Two wins, two small wins today. So that's the win for the day. NAS 100. Let's go.